Good afternoon, everyone, and happy Tuesday. You have Alyssa Corm and Ed Carson here with a look at the stock market today. And on today's show, since we did see the Dow outperforming today, Ed, we're going to take a look at 3 Dow stocks. What do you have for us?
Yeah, good afternoon, Ali. We're going to take a look at JPMorgan and Caterpillar, which both broke out today, and Apple, which is testing key support.
That it is. First, a look at the major indexes. Here we have the NASDAQ closing down today about 0.3% after opening higher. We have the S&P 500 finishing down just fractionally. The Russell 2000 down about 0.5%, and the Dow outperforming today, but up just 0.2%. So, Ed, what do you make of this kind of stalling type action that we saw for the NASDAQ today?
Yeah, I mean, like technically it isn't stalling because did go negative. I mean, I guess the Dow could technically be a stalling day. I mean, if it's not, but really, I mean, after the last couple of weeks, just sort of going sideways is just fine. I mean, it just didn't feel like after the opening minutes, it sort of settled down into the situation where the NASDAQ was down a little bit, and the Dow and now Dow is a little bit up. And we had Treasury yields surging today, which is good news for the financials, and we'll get to that in a little bit. Not so great news for growth stocks because if you discount the future, based off of some of these high valuations, that hits some of the names like software and some other stuff. But really, I mean, we've been running up. We're at record highs. We're still extended a little bit. So having a day like this is actually fairly positive.
All right. Well, you mentioned a strength in financials, so let's take a look at JPMorgan. This stock is really perking up, Ed. Shares gaining about 2.4% today. We did have a pullback here that created a handle for JPMorgan. And ever since then, the stock has just been rebounding higher, and a very nice gain today after some tight action kind of around this 140 area. So what do you make of this move by JPMorgan?
We're famously not too excited about bank stocks, especially the big ones, because they, if you look at the relative strength line, the blue line, it just doesn't tend to outperform over time. And JP Morgan is better than most of them. So a lot of them are weaker. But there are periods where they do outperform, and a period where the economy is bouncing back, where Treasury yield spreads are widening quite a bit, which basically means the banks can make more money on the loans they make. Those are positive signs, and so you can imagine, there's a lot of banks that are doing well right now. So this could have a decent run here.
Yeah, and while the relative strength line is off of recent highs in recent years, it is shooting higher. So the angle of ascent over the last year or so is definitely notable here. So JP Morgan technically in a buy zone right now.
That's right.
All right. And next on our list, the next Dow stock is Caterpillar, gaining about 2.2% today. Now, this is a stock that maybe warranted giving it a second chance, because it did round trip this attempted breakout here, but it's seen some nice gains, Ed, since this rebound and clearing of this downward sloping trend line that we pointed out for people the other week, and ended up with a good gain today, clearing that 200 level.
Yeah, and that trend line, a lot of all of the stuff is great. What you marked there is that because it came down to the 50-day line and a prior base, so prior 3 weeks tight, and so that was an area where you might expect it to find support, and then it rebounded right away, got back above that trend line, you say. So that could have been a place where you bought it. That's actually where Swing Trader added it. But today it came back. It actually, it's not quite long enough to be a flat base, but on a weekly chart at the same time, that is a 3 weeks tight in there too, which would have worked at the same buy point, 200.27. So that's a place where you could have added some shares or even started a new position. So that's something to be, this is, heavy equipment and construction. Mining and construction are two areas, very cyclical. You can see how the stock is rebounding basically since the crash, even though the earnings have been terrible because everybody's betting on the 2021 recovery.
Exactly. Yeah, we could see those numbers here. So yeah, this is one of those economic recovery plays, which a lot of those, as we do get more and more positive vaccine news, seem to be in the spotlight. And last but not least, Let's check in on Apple. Did not have a good day today, like these other two Dow stocks. It closed down 1.6% today. When we were looking at it this morning on IBD Live, it was really hovering kind of right around that 21-day line. Closed definitely below that level at its lowest point in a couple of weeks here, Ed. And it's now nearing this 50-day line, which is also coincides with that 10-week line on the weekly chart. So investors who like buying on pullbacks, what ideally would you see from Apple at this point?
Yeah, because it basically touched it on the 10-week line. It's like 7 cents away. If it rebounded here, you could buy it. There's all sorts of buy points with this one. We can, you can rattle them off and going on. But I mean, I would like to see maybe getting back above the 21-day line because that was an area of support, just to get a little strength, and maybe even last week's high, which is just right in there. That would be a good spot too, right above those kind of areas. So there's all places you could get it. Once it gets above the 21-day line, it seems like there's endless places you could buy it because there's still the 138.89 buy point. There's 145, 119. I mean, I usually don't like to throw that many, but I think if you get above the 21 day and get above last week's high, you could start at least initiating a position off the 10-week line, and just seeing it. Like, obviously, just have to keep in mind using the 10-week line as a sell signal. I mean, if it doesn't work, if it comes back down through that and decisively closes below that, then you can get out with a relatively small loss. I mean, that's why we talk about sizing it off that.
And earnings are out of the way. You have that risk off the table. Some pretty great numbers that Apple reported in the last quarterly report after a decline on the bottom line and just really slight sales growth, a big pick back up in the numbers on both the top and bottom lines in the most recent quarter. So we'll have to see if that trend can continue for Apple and if the technical action can start perking back up as well. But that is it for today's show, everyone. Thanks so much for tuning in. And you can bet the conversation is going to continue tomorrow morning on IBD Live, where we will have special guest David Ryan rejoining the show to drop some more knowledge.